Hello, I'm Tony Kaye. I'm the editor of Eureka Report, and I'm talking with our economics writer Callam Pickering today about what's happening with monetary policy, interest rates in general across the lenders, and the Australian housing market as well. So, Callam, there's been some interesting things going on over the past week or so. First of all, we had the Reserve Bank meeting last week where they kept rates on hold, no surprises there. But then we've had some other things going on as well, and there just seems to be some interesting factors at play at the moment. So just wondering if you could walk through those.
Yeah, there's an interesting divergence between what the Reserve Bank believes is happening right now compared with what some of the major banks are thinking, as well as what the IMF is saying about Australian monetary policy. So you've got the Reserve Bank, they held rates at 1.5% when they met last Tuesday. As you said, no surprises there. And the general sentiment surrounding what they said was that they believe that rates are going to stay stable for some time. By comparison, banks such as Macquarie Bank and also Credit Suisse came out and said, look, we think interest rates need to be cut, and they need to be cut by at least 50 basis points this year. And then you've got the IMF have come out just recently in their report on Australia and said, look, we think the risks are so great for Australia right now that we think the Reserve Bank needs to halve interest rates down to 75 basis points, their lowest level in history, in order to manage some of these risks.
It's interesting because the banks and other lenders are a bit all over the place at the moment. You've got some lenders increasing their variable rates on residential and investment loans. You've got fixed rates going up. Others are playing the game of cutting their rates slightly just to remain competitive. Then you've got the Commonwealth Bank coming out a few days ago saying that they're going to cut their investment lending. So there's some interesting things going on.
Yeah, that's right. And these dynamics have been occurring for a couple of years now. APRA urged the banks to hold more capital against their housing loans a couple of years back. And slowly, bit by bit, we've seen the banks look to increase their capital. And in turn, they've increased the spread between the cash rate and their variable and fixed mortgage loans. So that's why we've seen every couple of months you seem to see a bank increasing their rates by 10 basis points here, 15 basis points there. What they're trying to do is protect their profitability as they increase their capital base. More recently, we have seen some tightening in lending standards. We saw that with Bank West just recently, where they've now said that they're not going to include the benefits of negative gearing in any calculations of investor loans. So that represents a tightening of conditions there where it will be harder for some investors to get loans to finance their new investment properties.
And then around all of this as well, we've got the Reserve Bank giving its views on monetary policy and the economy. So what are we getting out of the Reserve Bank at the moment?
Well, overall, the Reserve Bank is fairly bullish, and it's a little bit surprising given that the economy did contract by 0.5% back in the September quarter, and so far the December quarter doesn't look like it was particularly strong either. So we have a very bullish central bank at the moment. They seem to be indicating that rates will remain on hold for the foreseeable future. They're pretty optimistic regarding growth in 2018 and 2019, and they think growth in 2017 will be pretty decent as well. And they also expect that inflation is going to return towards their annual target of 2 to 3% over the next couple of years. So they're fairly optimistic at the moment. As I said earlier, some of the other banks are less optimistic about how conditions are going to unfold. So it's certainly going to be very interesting to see whether the Reserve Bank's got this right or whether they're a little off base.
Clearly some lenders don't believe the Reserve Bank's getting it right at the moment.
Yeah, that's right. And I think there's always a little bit of disagreement surrounding monetary policy and certainly the timing of monetary policy. But rarely have I seen a situation where the Reserve Bank seems as bullish as it is, and yet some of the banks and the IMF are so pessimistic about Australia's economic outlook. I think a lot of it comes down to what's happening with commodity prices right now and commodity markets more generally. If prices remain at a fairly high level, then I suspect that the Reserve Bank might be right in their interpretation of events, in that inflation will begin to pick up a little bit and that it'll be okay for them to keep interest rates unchanged throughout most of 2017. If commodity prices do begin to come off though, I think we are going to see another shock to inflation on the downside. That's going to make things quite difficult for the Reserve Bank and they're going to be forced to cut rates again.
Well, it's very much a case of watch this space, I think, and we'll certainly be doing that over the next several months. So thanks again, Callam, for coming in. We'll leave it there today. I'm Tony Kaye. I'm the editor of Eureka Report. Thanks for joining us and we'll see you again next time.